Portfolio Builder members, welcome to our Diamond Level live webinar. It's a smaller group with folks who have a little bit more to trade with. Welcome Gary and Reggie Banks. So far you're our two attendees today. How's it going? Reggie writes all good. I'll let you just type through the chat feature. How are you doing, Gary? You out there?
I sure am.
Welcome. Okay, we got a few more people joining. Welcome, Henry. Rep 120 back again. I think his name's Ira. Henry Hepler Group. We got some of our normal suspects showing up. Welcome. I'm going to go ahead and mute it as people keep piling in here, and I'll open it up for Q&A in a minute after a short presentation. For those of you following our program for a few weeks, our trade alerts have been very defensive. We've been putting on in-the-money covered calls where we make a little bit if the market goes up. We make more if it goes flat or slightly down. And of course, market's been flying up all year, breaking records. We had a fastest growing market of, I believe, all time this year. We had an 8-day winning streak, which is extremely rare on the S&P 500. And finally, we got a small pullback in the market today. So we'll talk about what's going on in the big picture and then zoom in on our specific securities here. Okay, so let's look at the SPY trade. We wrote the 286 strike yesterday. And right after we did that, market jumped up to close out the day and then opened back down this morning. I'm going to switch over to my PowerPoint and then we'll look at some of the specific charts. So the trade wars continue. It's not nearly as big of a deal with this current trade war, although Europe and China remain a major problem for global stock markets because their economies are slowing down, especially in Germany. So Donald J. Trump tweet, that is this morning at 5:30. He was up early. The World Trade Organization finds that the European Union subsidies to Airbus have adversely impacted the United States, which will now put tariffs on $11 billion of EU products. The EU has taken advantage of the US on trade for many years. It will soon stop. Of course, they come out with retaliatory tariff threats, and this is all in the midst of Brexit. So there's the new latest on tariffs. Meanwhile, it's unclear what's going on with the Chinese tariffs, whether those will be removed once they strike a deal or if it's going to remain in play as an enforcement mechanism. So ideally for global markets, they are removed, but perhaps for American interests, it would be better for them not to be removed. So we'll have to keep a close eye on what's developing with that. And here's a look at global trade, growing very strong for the last decade until we got this recent blip. Meanwhile, oil is on a tear this year, which has a huge impact on inflation. So I think that this move in oil from below 45 up to 65 is going to put pressure on yields, which eventually will become negative for stocks. And so everybody's scared that we're going to have a quarter at least of major revisions and slowdowns in earnings. Now the different banks are arguing as to how long it may last, if it'll get strong again by the second half of the year or not. But that's one of the reasons we've been playing it safe for the last few weeks. And I've noticed I tend to be a little early in trying to get defensive, I've noticed. And so in today's trailer video, I was showing you that, we are once again a little bit more bearish than the market's predicting for the next 7 days. Margins are tightening, wages are rising. Mentions of labor costs and earning calls is at an all-time high. Meanwhile, it's very confusing who's actually bought this rally. Sure, I guess you could say the buy and hold retail who doesn't look at their brokerage account very often, watch their portfolio drop in value and go almost back to where it was from Q4 of last year. But right now, the data coming from TD Ameritrade is that even retail is now smelling the stench and selling. So it would appear that the only people purchasing stocks in great value are the corporations buying back their own stocks, and then the Japanese central bank, which is the only central bank that can actually, well, one of the few major central banks that's allowed to actually purchase ETFs. Of course, there's a lot of rich little countries in Europe also doing that, and banks all around the world as well. But those are the big buyers. Meanwhile, the IMF is constantly revising down growth expectations around the world. And so it's only dropped from 3.5 to 3.3, but this is quickly being revised lower and lower. So we can understand why central banks have been so dovish. If we look at the revisions, all over the world, growth is being revised down. So we had synchronized growth really peaking in 2015 and 2016, and then we've seen it just shoot way up into 2017, crash at the end of 2018. And so where do we go from here? Meanwhile, they continue to to revise Chinese growth lower and lower, which can be a huge problem for the global growth story. Banks are announcing layoffs. Who knows what's happening better than the banks? And meanwhile, the job market seems to be starting to get maxed out. The job openings is having a pullback, even though the labor market continues to tighten. And meanwhile, Walmart is rolling out robots after raising the minimum wage. This is a big theme that is going to become a bigger and bigger problem for society as automation starts to replace the easy jobs. Also, Bank of America announced a $20 minimum wage within the next few years and raised from $15 up to $17.50. So the big picture is playing out. Meanwhile, one of the best leading indicators showing weakness is the real estate market, and we're seeing real estate prices having trouble all around the world, especially in very safe places that have had very few pullbacks like Australia and Canada. Meanwhile, another sign that people are hungry for a safe return, Aramco oversubscribed their bond offering 10 times, and it barely pays more than a US Treasury. And in fact, I believe it pays less than their country's bonds. So this is what everyone believes to be the single most profitable company in the world. And you can see it dwarfs the top companies in America. So for those of you, again, interested in saving on your membership, 505-322-9884, call Mike. All right, now I'd like to switch over to our portfolio. Real quick, the crypto portfolio was launched last year, and it experienced some drawdown. I think just a few weeks ago it was down 25%, and now for the first time it's showing a big profit, up 34%. A lot of profits in Bitcoin, Litecoin, Cardano, Neo, Verge, OX. And so this is our first technology we developed and released last year. And essentially it helps you build an ETF just like the SPY, but for cryptocurrencies. And it's based on trading volume over the past 30 days. So the more money flowing through the cryptocurrencies, the bigger the position. And so I'm not going to get too into how to use this today, but just want to give everybody a teaser. This product and feature set is only available in our diamond level program. So actually Bitcoin is the top performer this year, and we were announcing that one of the best predictors, Jeffrey Gundlach, had called for Bitcoin to hit 5,000 this year back in January when it was trading close to 3,300. So yet another prediction he has proven right on. He also predicted stocks would rally last year and crash at the end of the year, which happened. And he also predicted in December of 2017, when Bitcoin was at 20,000, that it would crash in 2018. So interesting to see that play out. We'll see if it can maintain this price. We have Turkey under some serious pressure. So there's a lot of foreign currency risk that I think is helping push a lot of capital into Bitcoin once again. And also, for those of you who are looking at Robinhood app for your broker, they not only have free commissions, they also have cryptocurrencies. So if you want to start to build some exposure to cryptocurrencies and you want to have absolutely free trading with our strategy, which will help you keep every little penny we collect from writing our covered calls and not give it to the brokers, this is our #1 recommended. Robinhood is our #1 brokerage we recommend. Okay, let's take a look at, let me pull that back up. Now, once again, I do want to point out that the true return on investment in the portfolio is in between buying back our covered calls and before we write the new covered call. So you can see prior to today's trade alert, we were sitting at a 10.4% return on investment, which is considerably outperforming our SPY strategy. Now, moving along, let's look at today's trade alerts. This is where we've inserted today's trades. If you don't like spreadsheets, you can probably still figure this all out. Really, all you got to remember is how many multiples of 100 you have per security. And so our recommended target allocation is right here. And so you end up with a 23% position in Microsoft. The next two largest positions are in the banks, Bank of America, Wells Fargo. Then we go to Apple, and after that it gets much smaller. If we pull up today's trade alert, now if this confuses anybody, don't worry. This is one thing that I do to make your life easy, is we can look at the SPY ETF expiration April 18th to get an idea of where the general market might land, to give us a better idea of where to point our strikes on the underlying assets. And so there's a lot of volume trading in this 285 strike today. And so in general, you're seeing a lot more volume and open interest a little bit lower than the market right here. Now, there is quite a bit of people still betting the market will keep rallying for another week. But because of the deteriorating data, I'm expecting a little turbulence, which would be abnormal for April, as it hasn't had a negative ROI on the month for the last decade. Of course, we've been under a ton of QE for the last decade, and so that might be taken with a grain of salt. Here's a chart of Microsoft, pulled back with the rest of the market. The Microsoft stock is very correlated to the SPY and offers a very similar covered call yield. So it's our safest position in this portfolio. We wanted to protect our capital on this one, so we wrote that in the money strike to protect. So if this goes up, we'll have a tiny profit, but if it goes sideways or slightly down, we'll get the maximum return on this trade. Apple is just flying sky high despite numerous problems. They did release some new services that may add some growth in a year or two from now, but certainly nothing extraordinary right now. They lowered prices in China and India, but really what's going on here is stock buybacks. So that's just an incredible chart, and the market's betting this is going to continue. So I think the main thing that they're speculating on now is what the plan is for the rest of stock buybacks. We played it safe. We wrote the in the money strike. I'm very convinced that the yields are going to rise and stocks are going to drop lower in the next month or two. So I want to not get caught off guard when that happens, if it happens. If the market keeps flying up, it's not a big deal. We'll make a tiny profit, but we had protection. We were able to protect our and still generate a consistent return. So if you watch Trade Alert video, this is pretty well covered. In general, most of our equities have a bullish slant right now. So we're going against the trend and playing it defensively. Now I'm going to do a quick demo of how to launch the platform for anybody who's new and wants to follow this particular strategy. Okay, so a quick overview. You don't type anything into this area up here or this area. You really only type into the darker shaded cells. So this is where we keep track of buying and selling stocks. If we scroll over, this is where we keep track of our deposits. So your first step would be to figure out how much capital you want to put into this particular strategy and insert your deposit. By default, it comes out just like you see it right now. So that if you don't have that much money or you want to add more, you would go alter that. Next, we control the asset allocation per grouping of stocks right here. So the green matches the green, the blue, the blue. The cash is for the bottom USD, which we use to hedge our portfolio in times of emergency. And then the orange covers our banks. Now, if we wanted to go short corporate credit, we would buy this SJB. Right now, that's not the case. So there's a 0% allocation. Now, why would we use this? Well, if we thought the tech sector was going to crash and that we were perhaps going into a very bearish period, I might very well likely recommend going to an allocation more like this, 20% cash, 80% banks. Now let's see what happens. All of a sudden you can see it's issued a trade alert to sell all of these and to load up on Bank of America and Wells Fargo. So why would we want to do that? Well, quite simply, these are the two stocks that would most likely be supported by the US government in a very risky time. And so it's no coincidence that these are two of the largest positions right now for Berkshire Hathaway. So I'm going to undo that because that's not what we're recommending at this point in time. But you can see just how easy it is to alter your settings to change what exactly it is you're putting your capital towards. Now, if you have a smaller initial investment, you could still follow this program, and I would recommend only following the banking stocks, most likely, or Microsoft. But right now, the yield on Microsoft is the same as the SPY, so there's not a big advantage in doing Microsoft over the SPY, whereas the Bank of America and Wells Fargo have had some volatility and have very good yields on the covered call at this moment. Now, at some point, stock market is not going to go up forever, and there will be a point in time where we want to hedge against even further downside risk that our covered call cannot protect. And so that's what we'll call an emergency alert. And that's when we'll buy a call option on the VIX and an out of the money put option on the QQQ. Now also, if we thought a specific company was having trouble or a big risk ahead, we could also do a specific put option on that index or on that ETF security. So that's the outline of how our product works. It's very simple. This is much easier than most option trading strategies. For the most part, we're simply doing a covered call and rolling it over every week. So now let me just show you how easy it is to do a covered call and what all the terminology means so that no one has the excuse that this is too hard or too complex or too many trades. Okay, so what we have right here is the Microsoft trade alert today, which we'll look at. So the first step is you have to buy 100 shares of Microsoft minimum to follow the trade. With our allocation right now, you end up with 300. So step one would be to buy 300 shares of Microsoft. So I think everybody knows how to do that. That's not hard. After you own the shares, now you can do one of two things with our program. You sell to open 3 contracts because we have 300 shares. The expiration is always going to be not the first one, but the next one. So it's not this Friday, but next Friday. And next Friday is Good Friday, so the market's off, so the expiration is on Thursday next week. Strike price recommended today is 115, and it's call option. So let's look at why we would write a call option, which basically says we will sell our shares for $115 if you pay us $4.35. So right now, the Microsoft is selling for $119.02, and we're agreeing to take a $4 loss. So why would we take a $4 loss? Because we're getting a $4.40 profit from writing the covered call. So that's what we call our baked into the cake profit. If the market shoots higher from here, the worst case for us is we get assigned and we make our baked in the cake 40 cents per share or 40 bucks on this very defensive trade. Now, if the Microsoft does not go up and it trades flat, we're going to also make the option time premium, which could bring our profit closer to $100 to $150 per contract. So what do we do next week? Now, in most brokerages, you can just click on the trade and hit close. So really, closing the trades every Tuesday is not an excuse to be scared of this, because it's really just going to be log into your brokerage, find the open covered call position, right click or left click and hit the close button. But if you want to see how to do it manually, there you go. Buy to close. So where the first trade would give us a credit in our account, selling to open, the buy to close would be a debit. And so if the market goes up, this price will go higher and we'll make money on the underlying asset. If Microsoft goes flat or down, the cost to buy it back will decrease. So it's just that simple, and it's repetitive. So we have 8 securities we're following with this program. Okay, so that's a good overview. I'm gonna go ahead and open it up for Q&A now. And if you don't want to speak, you can mute your you can self-mute yourself with that little mic button. All right. How's it going out there? Any questions? Oh, there you go. There you go, Jerry. Sorry for calling you Gary again. My bad. That G just trips me up. How's your portfolio going? You still killing it, huh? 'Cause-
Did you want to look at it?
Sure. Yeah, let me pull it up. Now, just one disclaimer for, paste your email you're using so I can pull it up real quick.
Okay.
Disclaimer, anytime we give a testimonial, I need to state that, these results are not average. And in fact, this student has gone off on his own. We did do this live in a webinar to reprogram his spreadsheet to be
Sorry, that was the wrong one, man. Wrong one.
And so everybody's results will vary. But he's been doing, is that the right one for your, I thought we were using the Gmail. There you go.
Yeah, that one. Thanks.
Now, what was your first date you started trading again?
313.
Okay, so you're about a month in, and you are sitting on a $7,400 profit. You can see he's sort of smorgasborded all our portfolios together. He's got the TBT from the basic program, the SPY from the basic program. Didn't like Facebook, so we ripped that out. Put in the VIX, or a product like the VIX, VXXB. What's the VIX I trade, you can only buy options on it. You can't actually buy the security. So what's cool about what Jerry's done here is he's found the VXXB and has been writing covered calls against it. So a lot of his profits have come from this one. And also through in the emerging markets. So he's got a very diversified portfolio in terms of being long equities. And then he's also got a play on the rising yields that we're expecting. So it's a nice setup. And what's neat is he put his personal touch on it. And that's the story, the big story for stock investment is nobody's exactly the same. So whereas one person might be more than happy and in a good position to take a little extra risk by writing the strikes a little higher and following the momentum until it reverses, other folks can't afford that. So you'll see my portfolio will be always on the safe side. Whereas Jerry's taking a little more risk and he's got the results to brag about. So looking good. You've got everything expiring in the next few days. And here's some of the yields you pulled just off of the covered call. And a lot riding on that VXXB. Any tweaks you wanted to make to this one, Jerry? Or are you pretty happy with the way it's cranking?
Well, I was wondering if I would benefit more if I exchanged the SPY for 200 shares of Microsoft on the call.
Sure. So let's talk about how we do that. So we go 0 on the SPY. And now it's going to create some of the program got a little tweaked out while we're trying to oh, I did the wrong one. No. Yeah, I think we lost some of the coding when we're trying to switch out all the tickers for you. Because it's not telling you to go to 0 on this one. Let's see what would happen if we do this. Is there one other company you're interested in? Maybe AT&T or something?
No, I was thinking of just if I exchanged that and got 200 shares of Microsoft and SPY.
Here's an idea. Let me try this. Yeah, what it doesn't do very well right now is trade absolute Let's see if I can do this for you. Yeah, I think tweaking all the formulas has made our calculator not work for your customized setup. I'll take a look at it after the class and try to get it fixed so that your codes are working right. But normally I could just hit 0 right here, and you can see it changes the target percentage. So let's see. Oh, it lost the whole code for this right here. Okay, yeah, I'll fix your formula. It's just a couple codes are off.
Okay.
But yeah, we could do that. So basically, we will just put the SPY at a 0 weight. And then if you ever want to switch this one out later with another company, we could. But yeah, something about this column is not.
What was your? I guess probably I was just asking more of your thought on it. I don't want to really change it since it's trading, and I'm continuing, to sell those calls on the SPY and stuff. But I just wanted to know what your thought was on that. Do you think I could pull out more premium if I had 3 Microsoft, or 2 more Microsoft versus SPY?
I think the yield's pretty similar. Let's pull it up. You may not get more premium, but you might get more appreciation in the underlying. So that might be a good reason to do it. But yeah, Microsoft's one of the most stable securities of all time. Just hard to beat that. So let's just compare apples to apples and see what kind of yield they both offer. And now remember, at the SPY, we get the compounding effect of doing it 3 times a week. So we're not able to compare necessarily the exact results you would have. Certainly, it'd be less work. Okay, let me punch these and then we'll see what kind of return we got on the 2.
Okay.
Okay, so I chose slightly in the money strike on both. And I think it's relatively the same trade in terms of where the strike is positioned. So on the SPY, we can do 287.39 is the current price, and we would get 225 added to that. So let me. And if anybody else has any questions out there, all questions are welcome. If you think it's a stupid question, it's not. It's something everybody else was too shy to ask. So please don't be scared to talk or to even post questions. And okay, let me grab this. And meanwhile, I do want to introduce John. He's part of our support team. While I calculate these yields, John, why don't you give him a little background on what you've done for the past 30 years?
Can everybody hear me?
Sure can.
It's Jerry, right?
Yeah, Jerry, yes.
Hi, Jerry. How many, Jason, how many are on the web right now?
We have 8 people on right now.
We're at a 10% premium.
Okay. Somebody's got an open mic listening there, huh?
So my
anyway,
bad.
Yeah, so anyway, I would just say this. I have, definitely a few years experience in the market. And I kind of want to reiterate what Jason just said because I think it's very, very important. And that is, if those of you out there are listening and not asking questions because you feel like your questions are silly or they're not important enough or they're stupid or whatever runs through our minds when we're in situations like this, realize that we're all kind of learning things every day in this world of finance. It can be a little complicated. So ask your questions. There's no stupid question. Ask it and get it clarified, because it's really in understanding what Jason is doing that you're going to find value in what he's doing. If you join these webinars and you find yourself in a state of confusion all the time, it's really not doing you much good. So we're all here kind of learning together, and people that aren't talking might be able to answer a question that Jason can't answer for you in a way that you can understand. So the idea of having a bunch of people on this webinar is it's inclusive. You know, we're all in this together. So ask your questions. You know,
John, how long have you been using this methodology?
well, I don't actually use the methodology because I'm part of the team. My goal and my role as part of the team is to help the investor to understand what it is that Jason's trying to do. It's to bring clarity to it. So, you know, but I will say this, Jerry, because I know you've been very good about sharing your information, but I also want everyone to know that we really won't ask you ever to publish your spreadsheet or financial information. We will always respect your right to confidentiality and privacy. So, you know, we'd never put you on the spot by asking you to put up your spreadsheet or any financial information onto these webinars, unless you wanted to. So I know that's probably in the back of the mind of a few people who've kind of joined this, because I've had some clients bring that consideration up. So I want to kind of get that out there. The last thing I want to say is this. There's something that's very interesting that a lot of investors don't know about. It's called the Rule of 72. And the Rule of 72 really illustrates just how significant the difference can be when you're talking about the return on your money. If you take the rate of 72, take the interest rate that you're getting, and you divide that into 72, it'll give you an idea of how long it takes for your money to double. Now, if you're at 3% at the bank, which is an average return at a bank or credit union or a brokerage account, that 3% into 72 would take 24 years to double. Well, if Jason is successful at capturing even a 10% return here, just 10% at the end of a year, that's 7.2 years. 24 years at the bank, 7.2 years in Portfolio Builder. So that's it. That's basically all I wanted to say. And by the way, when Jason is talking about all the stocks and he's talking about the SPY, factor in the dividend yield that stock pays you. The SPY alone, I think, is a UIT that has a dividend of about 2%. So whatever you're getting at the end of the year, add 2% to that, because that's what you're getting. That's the underlying value of owning the stocks of the SPY. So that's it, Jason. Thanks for introducing me. Great webinar today.
If anybody wants to call John and just talk the markets, 505-217-8757. Okay, so Jerry, I pulled up the comparison of the SPY to the Microsoft right now in this very moment. Now this is a very close to the strike covered call, so we're not going to get this total return in a week, but it just does illustrate the difference. There's a little more yield on Microsoft right now, and that's with it going up. So the volatility, it can also be beneficial if it's traveling up or down quickly. So 1.17 compared to 0.8. And if you do that sort of return 52 times a year, it's an insane return. So of course, we're not trying to hit that goal. Honestly, a 20 to 30% return is where I want all of these portfolios to end up with, and to use a lot of protection along the way. Because if we get higher than that, you got to realize any return that you're generating, you have the exact chances to get the opposite. So if we play it safe and make a really smart 20 to 30% return, we're going to be very happy. Versus playing it risky and trying to shoot for above 30. So yeah, Microsoft has some advantages, but it's way less diversified. Now, if it's sitting in a portfolio like yours, you have a lot of different assets. So I'd say that's very similar to our current high yield setup. To keep the programming a little easier for you, you might want to consider printing out a new spreadsheet, and we would simply throw in what I might do for yours to make your life easier and to make sure the programming is working nice and clean. We might put the VXXB on this basic one right here, where you're doing that one. Put your emerging market allocation right here. So let's just do that real quick. Let's see if this would work. Okay, so we got the VIX there. We're gonna go. Now, how many? Let's see. You had. Okay, so we're gonna need 30K for this one, which we have. That's good. Oh, we have too much. I'll put this one at 29. I'll put it at 30. Okay, so there's that trade. But we have to put all your covered calls in. I'll add that in a second.
Okay.
Now, emerging markets, let's see what you had. You had 200 shares, about $9,000 cost. So we're going to zero out your allocation right here to that one. Oh, you had the GDX too. Okay, so I'll move this one over to emerging markets. This way you kind of keep your portfolio organized the same way we issue the trade alerts each week too. So that might kind of help you in the long run. You had 9,000 in that. So I'm going to add an extra 9,000 to this guy. And I guess we're going to go 50-50. Okay, and then your high yield, okay, TBT would go to the first one, so move that over there. That's going to be 17,000, so we'll add another 18,000 to this deposit. And let's see, the ratio of capital is, okay, 60-40 approximately. Okay, so that's agreeing with you there. Let's look at what else we got. Okay, so now at least we're a little more organized to match the way our trade alerts come out. Okay, so now this is looking a lot better. Now what would we do? Put this back to Microsoft. And then I think what we'll do is give Bank of America and Apple. And let's see, the ratio of capital is a little heavier on the, let's see what we got. $75. Okay, yeah, this tab. So what I'd recommend, Jerry, what I'll do is issue a fresh sheet, and what we'll do is after the webinar, even I could help you. We'll copy what we just built. I think this particular tab got a little messed up when you and I were playing with all the tickers and all that. But if we do it this way, you'll have the SPY and TBT in the basic tab, which is easy to follow Monday, Wednesday, Friday. You'll have your emerging market trades on Thursday organized in this single tab, which coincides with our Thursday trades. And then we'll have your kind of hand-selected group of stocks from the high yield. And now if we did want to push some money out of the, oh yeah, we got rid of the SPY. So yeah, then we could get rid of your SPY position altogether. This is kind of like the SPY. And then if you wanted to put more capital into Microsoft, we could add some more money to this portfolio. And so you'd end up with that heavier Microsoft portfolio to get rid of the SPY. And I think that would be the same as what you're doing, but just organized to match our different classes a little better. How does that look?
Yeah, on this you have 600 Microsoft.
So yeah, so something about how we were trying to manipulate this tab. I'm going to issue you a brand new sheet, and then we can, then we'll be able to copy what I just built over to that, and it will start giving you the right trade alerts. But by organizing it this way, you'll be able to have that VXXB in replacement of the SPY, which I'd say that's the most correlated product to that. So you can replace the SPY with the VXXB trade, and then if you want to put some more capital into either Microsoft, Bank of America, or Apple.
Okay.
So right after this webinar is over, I will crank out your new spreadsheet, flow all this data over, and then maybe tomorrow we could demo it again.
Okay, that sounds good.
But that way you're a little more organized. Before it was kind of just a smorgasbord all piled together, which I know is nice to have it all in one place. But I think if you keep it, the SPY trade will be most related to the VXXB and so on.
Well, in an inverse way, right?
Right, but so those two are tracking exactly in an inverse direction, but the VIX is related to the total market change of direction.
Yeah, right.
So it's very correlated to the SPY. So that means you'll be able to look at the direction of our SPY covered call and get a good idea of where you should do your VXXB covered call.
Okay. Good deal.
Okay, Rep 120 wants to know if the formulas on Google could be transferred to Excel. Yeah, I haven't tested that, but yeah, you can go File, Download as Microsoft Excel. So I'm sure that would work fine. I'll test it to see if it will pull the Yahoo we're pulling prices live from various sources. This one's Google Finance. We were pulling option data from Yahoo Finance right here, but that's been a little shady, so I've stopped doing it. So sure, I'm pretty sure that would work.
I've tried doing that. It comes out just a little bit different.
Does it? Yeah, we have 4,000 sheets out there and hundreds of them being touched every day, and we can see when they're touched or opened in Google Drive. So we're not spying on anybody, and of course this doesn't give us access to your finances in any way, shape, or form. So
It seems like when I do it on the spreadsheet, I have to just update the price on a daily basis.
on the Excel, yeah.
Yeah.
Yeah, you're better off using the Google spreadsheet. Another reason is as time goes on and we increase the automation and technology of this product, for a while it'll be all delivered through the Google spreadsheet as we change the template, the settings, all this sort of stuff. So with the Google spreadsheet, we can actually make code that will go overwrite your spreadsheet and update it with all the new automation that we generate. Especially if you start getting into the cryptocurrency world, it's really important to be using our software, as we have a proprietary technology with the Chrome app you can see right there. You can only follow the crypto with the Google spreadsheet. This software does not work on the Excel. And this may be an important hedge against currencies for many of you, to have at least a 5% cryptocurrency portfolio position, especially if you're investing in our Diamond program. That's a big feature that's available. Any other questions out there today? Okay, do you know if Robinhood can hold your cryptos? Yes, they do. Robinhood's a great app. They're valued at $5 billion. They have all the big VC money paying for all your trades. These days, all the brokerage firms clear through the same pool, so there's no difference in getting filled from Ameritrade to Robinhood. Robinhood has been very successful at attracting the millennial crowd and bringing in $1,000, $2,000 portfolios. They've had a terrible time bringing in high net worth clients. So they are desperate to get your business, and I believe will be the best single place you could follow our program. When we're making smaller defensive profits, every penny really adds up. And if you look at all these famous hedge funds that have had these great returns, after you pull out the 2 and 20 fee, they've done terrible. You're better off just owning the SPY and doing nothing. So if we can save on the assignment costs, on the option rated costs, and on the stock commission costs, why not? Right, you do not need your own wallet, and they insure up to $500,000. So if you're scared of being hacked and losing your Bitcoins, that's a good thing to be worried about. And now they do have a limited number of cryptocurrencies. If you really want to get advanced in cryptocurrencies, we have a very thorough security course. Teaches you how to make sure you never have your identity stolen, which is the big risk. And then we like Binance. So Coinbase for the big coins, Binance for the small. But I will throw out that with our software, we can make it so that you only get the most critical cryptocurrencies, which Robinhood does cover all of those. But yeah, Robinhood can be your one-stop shop to follow every last part of our program. They, protect your capital up to $500,000, and they have free trading. They have the best phone app. You can be following this product, even the diamond level product, probably 10 minutes. every Tuesday.
What
Click
are
a
your thoughts
button, cover them, look at the strike, write the new one.
Jason,
you're
what are
done.
your thoughts on, what are your thoughts on Bitcoin, by the way? You think the main bottomed out?
Yeah, I think Bitcoin has a bright future. I don't think it should be a big part of your portfolio. I think if your portfolio gets over 10%, that's time to sell. And most likely the market has, gone on another parabolic move to the up. So once we get to that sort of circumstances, I'd probably push it down to a 5% position. But yeah, that's a very important asset. It's very similar to gold. And
What are your
yeah,
thoughts
there's
on?
a ton of money flowing into it in the private equity side. So that's a good clue that this is not going to just disappear.
Do you think it's bottomed out at this point?
I think if they start to, I think if we have a global recovery with growth, that all the central banks will raise rates and crypto will have another tough period of time. But I do think once they do raise rates, stocks will crash and they'll have to lower them back down. So yeah, we're entering a period of time where it looks like governments and central banks think because there's no inflation, they can keep printing. So if that's the trend, cryptocurrencies are going to do very, very well. Also, if we see the dollar becoming stronger and other emerging markets crashing like we did last year, if we get a repeat, there's another big demand for cryptocurrency. So trying to predict the short-term prices, it's a random walk. I don't try to do that. But what we can do is have the right allocation to that investment product. So 5 to 10% makes a lot of sense. 20 to 30% does not make a lot of sense. And that's kind of my recommendation. But yeah, I mean, Bitcoin's the single fastest returning product in all history. It's only been alive for 10 years. And there are a lot of great guys out there who hate it. Buffett hates it, calls it rat poison. Peter Schiff, the gold guy, he hates it, but he likes gold, so I think that Hepler Group asked if my opinion changed when they got rid of the Bitcoin futures. There's some rumor that the elimination of that caused someone at BitMEX. So BitMEX is this unregulated kind of black hat futures market where most people go to short Bitcoin. And at some point, it was April 1st. $100 million flowed through the 3 biggest exchanges, and it started at BitMEX. So someone was covering a big short position very quickly, and that's what gave us this huge spike. So if it will continue, I don't know. I can say that Wall Street private equity is pouring a ton of money into cryptocurrency, so I don't think it's going away. Central banks, and even we're getting even the leading hedge funds, Ray Dalio, Jamie Dimon. They're now coming out with very progressive ideas that we should be essentially just creating what they call social nets. We're talking about handing out free money to everyone. So, if this is a period of trying to decrease the inequality gap and it results in increasing the monetary supply dramatically, cryptocurrencies have a great future. Are they going to replace the dollar? No. Could they slowly become as important as gold? Maybe. If it did that, it would go up a lot from here. If it even got a quarter the net worth of gold, it would go up dramatically. So yeah, it makes sense to have a 5% position if you're a moderate risk taker, and a 10% position if you're a aggressive investor. And you got to be willing to let it ride. It may drop 50 to 75%, and you have to reinvest to keep that right allocation size. On the other hand, if it's skyrocketing up, we're going to be pulling off profits. We don't want too much of our assets in this highly volatile, easy to manipulate product. But is it going away? I don't think it's going away. Is it going to zero? I don't think it's going to zero. And neither does a ton of money that's flowing into it from the private equity side.
Hey, Jason, I see Robinhood gives you the ability to download your 1099s to TurboTax. Do they do that for the Bitcoin too?
Probably. I don't know. I'd have to double check that. I have only used Robinhood for stock trading. For cryptos, we've used mainly Coinbase and Binance. But yeah, taxes on cryptos are a whole mess. Our software does keep track of every trade, so you will know exactly your P&L and have a very simple strategy for accounting for your taxes on cryptocurrencies. So I would definitely recommend using our platform to worry about your taxes versus trying to use some sort of automated system from one of the brokers. But if they do have it, that's not bad at all.
So then, can we download your spreadsheet into TurboTax?
You guys already got it. Let me give you a little overview. So, okay, we got our position manager. Now we do have a new release coming out, which we're still testing, which automatically organizes the coins by exchange. So it's color coded. You know, we love our color coding over here. Yellow is Coinbase, blue is Binance. And then green we just have for the core USD and Bitcoin. You can see that the sizes go way lower. And this was a lot like the .com crash. A lot of these tiny cryptocurrencies raised a bunch of money during the mania. We're throwing parties and who knows what, blew it all, and a lot of them are extinct. But the ones that survived, you know, Amazon crashed 98% in the .com bubble, even though it was making profits the whole time. It's just insane how leveraged these different markets can become. So what's emerging are these are the strong companies. Evolution did its job, knocked out the weak, got rid of too much speculation, and yeah, now is probably not a bad time to be looking at crypto. So the features, this is just the kind of the look through the window view. Money Manager tells us what to buy and sell, and we can put a minimum trade. So if you're a crazy person who likes to spend hours managing their portfolio, which we've got about 150 people on this particular product, you can set your minimum trade to very small. You might even go, Binance will do as little as like a $35 trade. So that would be like a 0.01 setting. Your minimum trade alert would be $50 or 0.01 Bitcoin. If you want less trades, you want to own less coins, you want less volatility but less potential return, you can just up the ante. So if we wanted to even have smaller set of trades, we might go to that. Now you'd only have a position of $1,000 minimum, and so you'd probably just be owning Bitcoin, Ethereum, Ripple, and maybe a tiny bit of Litecoin. But if you want to get exposure to some of the other technologies, which it's a whole education just to understand all that. You really don't need to know all of it. All you need to know, governments are in a period where there's a huge problem with inequality of the rich and the poor. The trend seems to be that they want to inflate the monetary supply and help reduce this gap. If that's the case, the currency supply around the world is going to continue to inflate, and that's bullish for cryptocurrencies. Now, if we have some miracle global recovery, China stops slowing down, US stops making ridiculous deficits, and we go back towards rising rates globally, that'd be very negative for crypto. So that doesn't seem to be the short-term outlook. So yeah, I think it's a good time for a 5 to 10% crypto position. And yeah, next diamond class, I'll spend a lot more time polishing up this current portfolio and also trying to get us switched over to the new platform. So I'll issue everybody in our diamond program the new platform. And the big change is that we're automatically picking up when the exchanges add or remove coins, and also prioritizing which exchange we want to buy them from, and as well as giving you the ability to, say, hey, I don't want 100 cryptocurrencies. I want the best 3. And so that's all controlled from here. As far as the tax accounting goes, we're actually in the middle of moving these all over from the old sheet to the new sheet. But we itemize every single trade, which means we don't want to do a lot of trades. This is a very buy and hold system. We calculate what we paid for it, what we sold for it in US dollar terms, so you have a profit loss of every trade, which you can give to your tax accountant. So I'll make sure to do a lot more on that next week. We're really in the middle of testing a new platform and getting it out. But yeah, it's been a nice rally. Let's just look at some of the charts on the crypto.
I'm curious you didn't have any NEO there. Why is that?
Oh, we got some. I'm pretty sure we got NEO. Yeah, and now in that product, we don't hate on any particular coin. The only thing we really care about, there it is.
Okay.
41 coins. So yeah, we don't discriminate on cryptocurrencies based on any sort of fundamental analysis. We're really just looking at the 30-day trading volume, and we're only looking at the trading volume now from highly respectable exchanges. So another problem is it's very easy to just buy and sell your own cryptocurrency and manipulate the reported trading volume. So we do our best to try to get an idea of what the real true volume is versus fake volume. And so there's some very well-known exchanges that inflate trading volume to try to attract people to their exchange. So we're basically just trusting Coinbase and Binance, who are the 2 leaders in this industry. Although there's always up and coming exchanges, and this is really just the most trusted exchanges for Americans. But yeah, you can see it's been a wild ride. So Jeffrey Gundlach came out in December with his normal annual return prediction report, and he called easy run to 5,000 on Bitcoin. Okay, let's see. We got some more questions piling in. Okay, these are all old questions. Any other questions out there, guys? All right, well, let's see, we got another question. Whatever happened to the coin that was issued by you? Yeah, our coin is still alive and well. So we created a cryptocurrency called the CRY token, and it was what we call a utility token. People who purchase that were able to get unlimited access to our various cryptocurrency technology. So going forward, the plan is still the same. We want to power our platform eventually with a per token use. So that's still in the works, and obviously with the crypto crash, it was hard to continue a business completely on cryptocurrency, so we did add in some more features, which now give investors a better product. Now we can help them manage the bulk of their capital and have a better idea of what should I actually be putting in the high risk, high return cryptocurrencies. All right, gentlemen, thank you so much for your time. We have a new alert tomorrow. We'll see where, let's just take a quick look at the SPY, see how close it is to our pick. Oh boy. Well, that's what we like to see when we write that in the money covered call. So we wrote the 286. So it's heading in the right direction to get the maximum return tomorrow. And that is one heck of a rally. So once again, thanks everyone for their time, and I look forward to seeing you on tomorrow's webinar.
Thank you.
Thank
Thank
you.
you.
My pleasure.